Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. So our market is struggling a little bit here. The last few days is starting to take over. So I want to talk about some of the things that I try to do to stay abreast of what's going on in the bigger picture. And obviously, most of you who have watched my show before know that I'm a big fan of being aware when the market is correcting and either tighten my stops or just have a lot more cash. So the market is trying to hold up here against downside momentum. I want to review the leadership and just make sure we know exactly where the strength of the market is. So how do we do that? So first of all, we have the different indexes, and here's the Nasdaq just to grab that one. So this is a 60-minute chart, and then down below I have a daily and a weekly. But what I want to show you on the 60 minutes, we've been kind of rolling over here. This black line is roughly the 20-day moving average. It's the 100 period on the 60-minute chart. So just to give you an idea, that's what we're looking at. All of the rate of change indicators have been drifting lower for about 2 weeks here, so we're just struggling to have any real positive momentum. Now, more importantly on this chart, this was our previous high in here, and the issue we have obviously is that we're not holding above that high anymore. So the market's going to try and wobble here a little bit. I think the bigger issue for me is when we look internally at the stocks, you'll see the problem that I'm noticing. So on the weekly chart, notice how we have a high that we hit back in September, and now we have a lower high in momentum. Just pressed too hard there. A lower high in momentum. And then we also have now a lower high again. And we see this sometimes when the market really wants to break down. And let me just go grab some extra time here. So what we see is we get these periods where the market starts to make lowering highs, and I could clear off a few things here just to give us a little bit more data space. Let me do that. So when we look at this chart, we get these correction periods. So you end up having lower highs getting put in by your momentum indicator, and eventually it gets so weak that it actually just goes clunk lower. And we kind of saw it back here in 2010. Right around the April timeframe, kind of gave it up after a big rally off the March 09 lows, and then fell all the way down to the zero level, and that was a great place to get long. And then we did the same thing in 2011, and that was a great place to get long. So we continue to have these periods, and as you can see, the market goes into kind of chop mode while we're trying to build a base, and then we kind of get back down near the zero line, and we don't spend much time below there. And as a matter of fact, look how little time we spent below the zero momentum level in March of 2020 during the COVID dip. So anyway, the main point for me is that the momentum indicator is telling us we're on a second lower high here. So if we're about to roll over, this is kind of critical, and it would be very similar to what we saw back here where we started to make a lower high, had a big dip, came back up, tried to make a higher high, and then the market didn't correct. Well, it corrected a lot, but more importantly, it basically came back down to the bottom of the Bollinger's or the 40-week moving average and just traded in around that range for a while before it could kind of get set up and get going again. Took until the summer, so from April to August until it really got kicked, and then that was enough to give it a surge. Now that doesn't mean, you can see in here, very choppy trading, so those things are really difficult, and I'm just going to see, that's not what I wanted. I just
Sorry.
try and get pinpoint up here. There, that makes my cursor a little bit bigger. Okay, so anyway, the point I want to make is that we have this big momentum drift lower on the Nasdaq 100. And so with that, it's a good place just to check our work and make sure that if the market was going to correct, we're comfortable holding what we have, and if not, perhaps set our stops tighter so if they do start to fall, it can let us out. And here's an example. This is one of the stocks in the EV or electric vehicle area. And of course, they had that sudden run in November to January, February. And then they've been jogging sideways, but you can see based on Tuesday's price action, all of a sudden this is starting to make new 3-month lows. That 3-month low, I went through the whole group. I have over 300 charts I watch in that area, and almost none of them were above the 20-day moving average. So they're all starting to move lower. I had, I don't know, 30 charts to choose from or something. When I see that big of an overall decline, it really tells me what we need to be aware of is that these stocks are, as a group, are breaking down, and what was growth areas is now everybody's avoiding. So people have moved into the S&P 500, and we can tell that by a couple of different ways. So if we just go grab a bullish percent index for the Nasdaq, what we see here is, this is for the Nasdaq 100, 76% of the stocks are on a buy signal. And recently last week we had over 90% of the stocks were above their 200-day moving average. When we go to the bullish percent index for the S&P 500, what we see is this was almost at a record. I mean, this is up at 85% of the stocks were on a buy signal, and 90% of the stocks, that didn't update what I wanted to here. Let me just go fix that. And SPX, and let's just make sure everything else is in tune. Yep. Okay. So what I want to show here is we were up to 96.7%, like 97% of the stocks were above their 200-day moving average. This chart goes back to the year 2000. We don't have a period like that anywhere in here. But what we're now seeing when we make this shift, when we change that over to the Nasdaq composite, so just the group, the entire group of the Nasdaq stocks, so these are, call it the biggest 500, we're up at, just to refresh your memory, 85% and 97%. Those are pretty heavy levels. And now what we can do is just put in NA. And so while we're doing this, the goal here is just to show you where the price action is going. So remember, we were 87 and 95 or 85 and 97, really high levels. Well, here we're only at 60% of the stocks are on a buy signal, and only 55 or 59% of the stocks are above their 200-day moving average. Well off the highs. And so what we're seeing is that as the market is getting to these highs, it's doing it with a lot less stock. And so we're leaving the growthier names behind, and we're moving into the much more stable Nasdaq 100, S&P 500, those types of groups, and we're really kind of avoiding the others. So that just gives us some caution. Now, another way to view that is this percentage of stocks above the 200-day moving average, above the 50-day moving average. And here's for the New York composite. You can see each rally we've had lower highs. The percentage of stocks staying above their 50-day moving average is getting lower. And our momentum indicator is rolling over while this is starting to happen. Now, again, if we change this over to the Nasdaq composite, what we see here, I just want to go to the CompQ. What we see when we do this is that we're down in the 30% of stocks are above their 50-day moving average. Compared to the New York Stock Exchange, that's dramatically different. So we're really kind of walking away from growth. Now, I think one of the real hard parts here is the market's still at all-time highs, and yet all of these stocks are really unloved. So the question is, are we just coming down here and we're going to reset and all of these stocks are immediately going to go higher? Or is the overall market going to get weak and we're going to start selling off the big names now? So we have this double top condition in the Nasdaq composite. And with that, we want to make sure that we're just very aware of what parts of the market are working. And recently, we've seen utilities and healthcare, consumer staples leading the market higher. On Thursday and Friday of last week, those industry groups were literally surging higher. And yet we're making new highs, but we had things like financials, which had a great week in terms of bank earnings, actually fall away. And on the bank ETF this week, we got a sell signal from the momentum indicator. So more and more clues here that we're starting to get into something, and maybe it's just a summer pause, but the bottom line is if you're sitting there holding all of these growthier names, you're probably finding it's already hard to hold, and it might get even more difficult. So anyway, it just gives you an idea of a way to try and protect against that. So if we go analyze the Nasdaq 100, these are sorted by their scooter ranking here, and just think about 100 stocks that are kind of some of the biggest names in technology or growth areas. And what we have, if you think about what is the top 25%, so above 75%, would be some of the stronger stocks that have obviously got some growth behind them. So when you look here, though, we only have like 15 or something that are actually above 75%. So out of the whole growth group, only 15 are kind of holding this thing up or leading this thing higher, and the rest are just average, and a lot are below average. So the concern that we have as investors is we have to be focused in on leading stocks that are taking us higher, but the problem is there's only 15 of them out of the group of 100. All the rest are just kind of following the index. So we're really not getting that growth. And if we look down here, here's Monster Beverages kind of right in the middle. And if we just go look at what that chart looks like, it still looks pretty good. And that's because the market's climbing, but these stocks this is kind of the average. And then when we go look farther down here, here's Skyworks at 38%, and it's basically got a double top pattern in there and hasn't really done anything since mid-February, since that February top that we saw. Recently, we tried to break through that, and now we've got that uptrend line that's probably in jeopardy. So I wanted to quickly work through these names. If we just hit the percent change for now, this is the types of gains we had today, and the types of stocks that were doing it were mostly healthcare. I think that's probably fair to say. There was a few technology names in there, but I'd say it was mostly healthcare. And then from that, more of a defensive tone. And here's consumer staples up in the top 10 on the Nasdaq. That's kind of a surprise. Here's PepsiCo, another staple. Here's Costco. So when you see that sort of arrangement, staying away from all of the high growth names, I think that's one of the big clues for us that things are changing. Okay, so let's jump in here, and I'm just going to go to the top of the list. And again, these are sorted by scooter ranking, so these should be the strongest looking charts on the page. And now we're going to view all. And again, it never hurts to I have these set up in a chart list all by themselves. And so, I got a whole bunch of chart lists, but one of my favorite chart lists is having the Nasdaq 100 in one. I've got the Dow 30. It's actually sitting up at the very top of my page, so I'll show you the S&P 500 first. So here's the S&P 500 as a chart list, and then I've got the Toronto Stock Exchange as a chart list, and the stocks that aren't part of the index as another list. And then if I go all the way to the top, here's the Dow. So just give yourself some methods to go in and look at those stocks easily and just see what's going on. But typically we associate the Nasdaq 100 with growth, and so by having them all set up in a chart list, I can just jump in here at any time and go through them. So Applied Materials, obviously in the semiconductor space, Uptrend is very nice here. If this is going to start to break down, that would be a good clue. Whenever you kind of get the break in the uptrend like we had in 2020, like we had in 2018, those were just good places to be aware of. And so what we would do now, what we would do now, I just need to turn this off, and then we can go into annotate and then just draw our line on here. And if this is going to bust, then I want to be aware that if the outperformance by applied materials is ending, I want to know that. And this is probably one of my better indicators. And also you've got a PPO that looks threatened here, trying to roll down. So it's just another way to think about that. Okay, so anyway, as we scroll through here, Align Technology Healthcare hasn't really done anything since the beginning of the year, relatively flat. It's been above and below, but we're just marginally above where we were to start the year. PPO's already rolled over. It looks like it wants to make a lower high in momentum here at the same as the prior high in price. So usually that's what we call divergence, where this has a lot less momentum as we go back and test the prior high, and that can be a concern. Looking at Expedia, these travel names have been unbelievable, right? This was $40 to 180. That's not a bad one-year return. And the big thing that you see here is this uptrend in momentum is out now, giving us a sell signal. And again, these are the leading names, so you can imagine how weak the names that are not the strongest scooter rankings are. So here's Lam Research again in the semiconductor space, and we could do the same thing on this one. I reviewed the semiconductors in the market buzz last week, so I don't want to spend a whole bunch of time on these semiconductors, but my point was, with only 15 of the stocks above the 75 level, that kind of tells us exactly what we need to know. We're just not getting the push that we're used to. So here's Tesla. It's still ranked very strong with the scooter ranking of 90, trying to bounce up, and what we've got is a lower high and a lower low on momentum. Now the real question is, do buyers step in here and start to buy this and push it up, or does this just actually roll down farther? And I don't want to get into the debate today, but the big question is, can it hold the 10-week moving average? Because if it starts to fail there, that's a good clue for us as well that things are starting to slip. And we also have that uptrend going on relative strength. If that's going to start to slip, it would be a good time to slip out of that stock. ASML, another semiconductor again. So we've got all of these semiconductor names that we've liked for a while, but the big issue on this one, that's kind of our setting, and we're getting a PPO sell signal this week, so that just gives us some concern. And the way we know that that line is actually crossed is that this number over here, the third number, is negative. The first is the PPO line, the second is the signal line, and the third is the distance between them. Okay, so moving on here, we don't have to talk about each one of these semiconductors, but here's NetApp, and it's been a pretty strong stock. Whoops, very heady, very sensitive touchpad here. We're trying to break through the prior highs at $80. We got up to 78. It's a common place for us to look for the stock to maybe struggle a little bit. And the real question is, here is the PPO is making a lower high while price is making a higher high. So a little bit of negative divergence, more caution expected. Western, you can see how important that support and resistance line has been in the past, and now we can just go grab that. And what do we see? We just see that's basically where we got stalled. Don't have to be much of a technician to draw that line. That one's pretty clear, support and resistance, and we're stuck there. We're getting PPO sell signals so far this week. Again, weekly chart, we have to wait for the Friday close, but trying to get our first impressions of what's going on, things are starting to get weaker. So here's Alphabet, Google parent, and what we see, this has been one of the better charts. The PPO is still holding up nicely, hasn't started to turn down yet. The stock surged a couple of weeks ago, and I think they report this week as well. So a meaningful, that tech name has been holding up very well. And there's a whole bunch of reasons, right? They've got Waymo coming, which is their driverless car technology, or automation technology for automobiles, autonomous driving. Lots of reasons to like Google for more than just the search engine. And then here's Micron Technology, another semiconductor rolling down below the 10 weeks so far. Doesn't look that great. Here's KLA 10 core or KLA Corp. And what we need to be aware of here is lower high on the momentum reading as we made a higher high in price. So again, one of those reasons to get out of the stock. And if we just draw the trend line on the on price here, I think that's pretty fair. And then if we draw it on here, we started to break it last time, whether you want to pick this one as your low, but the issue is we're starting to break down again. So again, this lower high isn't that good for us. So another semiconductor that looks a little worrisome, and that's what I mentioned last week, is it was a pretty mixed bag in the semiconductors. You'd think for such a strong area with shortages everywhere, those would all be to the moon, but for some reason they're struggling a lot. Here's XRAY. Now this is nice because it's not a related name. Sorry, my finger keeps hitting that button. It's not like a direct consumer technology corporation, a little bit different. Trying to break through this 67.09 prior high. We're sitting at 65.48, and our weekly high was 60, call it $66. So we're just $1 under there. You know, a horizontal line on here basically says we're at resistance. Now the real question is, can this keep going or does it start to roll down? Here's Wynn Resorts. You'd think as Vegas opened this would actually get better, but the stock's kind of already priced that in. And now it's starting to break down on your PPO. You're getting a sell signal. You're moving below your 10-week moving average. These are the top stocks. We're just dropping now below the high scooter ranking. So we're in the average stock now. Now here's Alexion Pharmaceuticals. And you can see a real resistance level, even slightly downsloping, but call it 150. We gapped above that. And this stock still looks like it wants to climb. So they've got something going on there. Walgreens Boots Alliance, this is kind of the weakest link in the Dow, I think. And we're trying to get back through these prior highs. Again, pharmacies starting to get involved in the distribution of the vaccine. We all thought that would help the stock. And here it is rolling over. Starbucks has been very strong, pointed higher. For the beginning part of the year, it was just kind of flatlining around 105, and now all of a sudden it's been gently working its way higher. It's up around 115. PPO is starting to turn up, so at least it's got some sort of an uptrend going on. JB Hunt Transportation Trucking's been on fire, so to speak. Really nice push higher. Nothing wrong with the stock so far. It looks like it might need a little breather here, but nothing, no big issue. All of the airlines are starting to struggle all of a sudden as they get their planes back in the sky. They have 90% of them in the sky. We think this is all the good part of the run where they're finally getting back to making money, yet that's already priced into the stock. And now we're trading below the 10-week, really for the first time since November. And the PPO trend line is ready to break. So, again, some clues for us here just to be ready for if that's going to break. And then we've got whatever, let's use the November low, starting to break through that this week, and then our our scooter ranking is starting to drop below 75. So another reason to avoid these stocks as they start to turn over from outperformers to underperformers. And then getting back into another semiconductor. This one's just gently trending higher, working good. You got a PPO sell signal, and it's just testing the 10-week again. But again, the whole group is starting to break. Trend line under this probably says it's still holding. It really needs to do that. 21st Century Fox here, Fox Corporation. Pushing, right around the 10-week, really spurty price action here through the whole Archegos Capital. Anyway, it's trying to hold its 37.5, starting to get a PPO close to a sell signal here on the stock. Now we're getting into pretty average, but here's Kraft Heinz in consumer staples, and actually, the 21st stock in the Nasdaq 100. That's shockingly low. Here's PayPal making a lower high so far, lower high, lower low in momentum, pretty concerning to me actually, but it's been a nice run from April or May of last year all the way up to 275. Marriott International rolling over at prior highs. Who knew technical analysis could be so easy? Just keep putting horizontal lines on these prior highs and see what the stock's going to do when it gets there. ADP, automatic data processing, again, trading sideways for 6 weeks. Nothing wrong with the stock. I probably want to make sure that this does not break down through this setup here. If this is going to start to roll over, that's just a good cautionary place to be aware of. And we've got that trend line there. And then this relative strength, you can see how it really hasn't been outperforming nearly as much as some of the steepness of the other trend lines I had drawn. We're already getting back to very average stocks here at 61%. Another travel stock, Booking.com, PPO rolling over. It's still trending higher. It looks fine, but I would just suggest that it's having trouble. It's probably going to have trouble if the whole market's going to start rolling down. IDEX Labs, again, healthcare, going sideways since the beginning of the year. A lot lower momentum on this current high, so that's kind of worrisome. Cisco Systems, look at that. We stalled at the prior high. Ross Stores stalling at the prior high, trying to break out. If we put a horizontal line on here at 123.50, just go grab that. There. So you can just see the stock's really working hard to stay above that. If this is going to start to break down, that's your failed breakout. Looking at Baidu, rolling down pretty hard, tested the 40-week moving average. That's a lot different than all these other stocks. And of course, the Chinese names have been hard hit. This Microsoft chart just trends higher. Satya Nadella, that guy's a wizard. Things are looking pretty good. At least the PPO started to turn up again here, but watch and just see if it can hold up. Anyway, how stressed could you be about owning that stock with a nice chart pattern like that for years? Monster Beverage, this one just tried to take out a prior high, getting lower highs and lower lows on the PPO momentum indicator, kind of what we're seeing on the Nasdaq 100 directly. Just want to make sure that that can keep going. But again, this was at the 50% level, and we're only at 30 of the top 100 stocks. All the rest have scooter rankings lower than that. O'Reilly Automotive, a recent surge here after not doing much for almost 6 months. So while everything else was going up, it was not. Ulta Beauty, this one basically got to prior highs and is stalling. Cadence Design Systems, just gently wandering sideways so far this year, but lower highs and lower lows on momentum. CSX Railway hasn't got caught in the fight yet with Kansas City Southern and Canadian Pacific and Canadian National. Lots of action in the railway space for mergers and acquisitions. Lower high on momentum right here, so I want to see that that keeps going. NVIDIA briefly tried to break out and then stalled, so it needs to be able to hold up against this, call it $600 level, and just see if it can stay up above. Microchip Technology, another semiconductor, wandering around the 10-week moving average. Fiserv, this one, trying to move but hasn't done anything for 6 or 7 weeks. At least the PPO still trended higher. The reason that the scooter ranking is so low is the price movement hasn't been as much as, I'll call it, the average of all of the stocks together. Okay, so with that, I just want to say thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recordings on StockCharts TV YouTube page. If you have any questions, you can always send me an email at info@gregschnell.com or go check out my website. And if you go to gregschnell.com/explore, you can find a discount there if you're interested in the services I offer. Thanks, everybody. Have a great week. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.